So that question is, where can we see private investments in our Fidelity statement? They're there. They're in the monthly statement. If it's an interval fund, which I was able to chart, you will see that position actually as a ticker symbol that you can look up and trade. Many of them do not trade intraday, meaning that you might see the performance just be stagnant, and then that might update on a monthly or quarterly basis. Many of those actually do post performance now on a daily basis, but that would be a symbol, and that would be listed in the mutual fund section. Other private investments that we use at Ausperity will be in the statement online. You can view them mixed with the other assets. Many times they're going to be listed in their own subcategory, but the transparency is very much there. Most of the private investments that we're utilizing, all of those that I shared earlier today, will be found on your Fidelity statement. If you need help locating that, feel free to reach out to the office. One thing that I've also been tracking in my career is the public markets are shrinking. Patrick, what's happening here? Number of public companies, almost 7,500 companies listed on the stock exchange in 1998. That number has dropped over 40%. And now we only have 4,315 public companies as of 2023. That's likely lower as we talk here today in June of 2025. So Patrick, maybe just real quick, one or two bullet points on why are public companies shrinking, and hence why should we be looking to private markets if you really want economic exposure or U.S. Economic exposure?
Yeah, so there's a question sometimes I pose to people, and you may have heard this, Rory, but if you've heard of the Wilshire 5000, it's an index. It's 5,000 companies in the U.S. that was launched, back in, I think it was 1993, and it was a fund that even like my dad invested in. It is an index. Do you know how many companies are in that index today?
No.
The answer is somewhere around 3,400 companies. So even though the name suggests, at that time it launched, it was more, don't just do the S&P 500 or the Dow, but do 5,000. That's actually shrunk down to only 3,400. And a lot of it is due to what's going on in the public markets. Regulations, public filings, trying to hit quarterly numbers, puts a lot of pressure on companies in order to, to reconsider going public if they don't have to. Mm-hmm. There was a time when they had to, because there was not enough capital in the private markets or by private investors in order to, fund businesses. So IPO is the only option. But now that more money has come into the space, and we'll talk more about it, but I believe it will continue to flow into the private markets for both generational reasons, but also because of the new structures. There's plenty of capital for companies to stay private, such as a SpaceX, which could go public today. I believe it's around $400 billion market cap, and it is going to stay private for a while. And so really what this course is showing you is not only are they declining, but the market cap of the biggest companies continues to grow and sort of dominate. So what you're seeing is 2 decades of shrinking, as simultaneously 2 decades of growth in the private markets. And in fact, the assets under management in the private markets has tripled every decade in size since 2000. So right now it's around $15 trillion, with private equity being the biggest at about 10 trillion. So, so I think therefore there's really, you have to think about the diversification and increasing risk factor around that. And also how many, companies like the Mag 7 or what you see on the screen here that makes up 35% of the S&P, those are really driving the majority of the returns in the public markets today. So going back to diversification that you showed this year with a major pullback, that was really only due to, 10 large companies that really had a pullback. Whereas in the private markets, you would have, I believe, a lot more diversification.